So, should we buy or sell the Japanese yen versus the Indian rupee pair? So, first off, read this disclaimer carefully. Then, do your good deed of the day by liking, subscribing, and here we can see that we are 3.8% away from the 52-week low, minus 15.4% away from the 52-week highs. When looking at Forex, it's important to also get the decimals, because in the Forex market, there are smaller moves, but due to the enormous leverage you can get, when trading Forex, the decimals can become a pretty big deal. Here we have the chart. Big picture, weekly data points. Going pretty far back, we can see that we do have a tendency to have time cycles. They differ in duration. Another thing that also a bit of a tendency is that we have these massive double bottoms. Here, not as massive, but double bottom nonetheless, that worked out. We currently have a bit of a double bottom pattern. So it's interesting. It's a point of interest. What I dislike about this double bottom is that if we look at it a bit more closely, you can see, however, that the right end of that double bottom, it is slightly lower than the left, so the bears are sort of trying to break it. When it comes to technical patterns, it's extremely important to understand that there are two sides to these battles. The bulls obviously want a double bottom to work. The bears, they can make huge money if they can break a double bottom. So there are two forces here, and that is why you will have patterns that are very good fail. They fail not because the pattern doesn't make sense, it's because there is another pretty big team on the other side of the fence that are doing everything in their power to smash that level. So far, we do have a double bottom, we have a bit of a rally, but we can see that there were more bearish activity down here. A bit of an omen, but I think that this is more bullish than bearish, but we just have to be aware of the fact that the bears were up to something a bit more ambitious. We are bouncing from a key RSI level on the weeklies and also PPOs. On the daily data points, we have seen a bit of a robust rally. Looking at previous counter trend rallies during this downtrend, we usually got higher RSI and also PPO. As such, there could be a bit more left in this rally. So in my notes, I write double bottom. I do give the bulls a 3 here on the technicals, simply because, yes, we have a double bottom, but as I said, during that right side of that double bottom, the bears pushed lower than they should have been able to push. Now let's look at the seasonality for the pair. Looks, over the last 5 years in green, 7 years in blue, 10 years in red is a bit messy. So 10 years in red, usually very flattish, but over the last 5 and 7 years, seasonality is just very bullish for the Japanese yen. To the left, we have the XJI. This is the Japanese yen index. Over the last, so it's a basket of currency that we are comparing the Japanese yen against. Over the last 5 years, from September to January, the seasonality is pretty strong for the Japanese yen. Over the last 10 years, we do see that October is actually kind of weak, and November is also pretty weak, December as well. Last 20 years, yeah, October is a bit weak. So let's look at the Japanese yen here against the US dollar, the reserve currency. Over the last 5 years, October, November, December are strong. Over the last 10 years, then it changes very dramatically. You see here that September is the worst month, October, November are weak, December is also, it's mediocre. And then the last 20 years, we can see that October is not really a strong month. November and also December are But obviously, the most relevant seasonality we did get was, the pure pair, the Japanese yen against the Indian rupee. The seasonality looked pretty good over the last 5 and 7 years. I think I will give the bulls a 5 on this one, but a bit bigger picture, comparing against the dollar and also looking at the index. There's been some very big changes over the years. Short and long-term patterns were very different. Whenever I make these forex videos on YouTube, they take a lot longer to analyze, and that is because I suspect it's because the AI, it also detects when I talk about the fundamentals and I talk about political events. So I think that it's probably not a hugely, like a big, good idea to talk too much about it, but I will give a score on the fundamentals based on analysis I have done. So I feel slightly bullish in favor of the Japanese yen versus the Indian rupee. But the pattern is very clear. I mean, I see it when I upload the videos. It's like 3 times longer, and I guarantee you it's the AI that detects words, that's being used and wants to just kind of analyze the situation. Let's look at relative performance. We are looking at this pair against the US dollar, minus 35% correlation, 27% with the Japanese stock market ETF, EWJ, then minus 41% here against INDA, which is the India stock market ETF, minus 97% with the 10-year yield long term. Daily data points, 66% with S&P 500, 84% with Japan stock market, 26% positive with the Indian stock market, minus 91% with the 10-year yield. So what happens with that 10-year yield is definitively going to have a bit of an effect on this pair. The 10-year yield is just, it's been on a tear, just smashing all kinds of records, just completely, really just unhinged. Whenever you have like a sharp move in the market, up or down, it's because many players in the market are just panicking, really. That is why you get those moves. Smooth moves is when smooth moves, whether it's a smooth rounding bottom or a smooth rounding top, that is when the market has very good information. Like that is actually an efficient market that really can digest the data and things are how it should be. Sharp moves is just the opposite. It's when there is chaos, and there's definitively chaos here with the 10-year yield. We had a very sharp pullback here, but now it's just been on an absolute tear. Looking at RSI and PPOs, we are definitively getting into territory that's been fail levels before, times where it makes sense to become a bit bearish on the 10-year yield. Obviously, going big bear on 10-year yield hasn't worked out yet. Looking at the daily data points, if you look here at, let's do it like this. Looking at the MACD, we have never had this MACD. Well, not never, but well, maybe, who knows? I mean, we have to going all the way back here to 2016. We simply haven't had this MACD. Looking at the daily RSI, we just had these are very extreme levels. The probability of shorting this successfully has gone up. Does it mean that it's guaranteed to work? No, but the data is just here. This is a highly abnormal move. The trend long term is that this move is very due for a pullback. Given that we had a strongly negative correlation between this currency pair and the 10-year yield, it means that if we were to see the 10-year yield cool down a bit, it would be bullish for the Japanese yen in this pair. Now I am comparing the pair against the 10-year yield index. The last time we had this substantial underperformance from the Japanese yen was back here in 2011. It's a highly abnormal level. Looking at the RSI, quite a few times where we touched this low end of RSI, it led to a Reversal of trend. That's interesting. Very much so. If we look at the seasonality, like that, the seasonality is very much in favor of the Japanese yen. Extremely strong outperformance, usually from November into December. In this case, I think I will give the Bulls a 6 here on relative performance. There is reason to think that there could be some good times for the Japanese yen ahead. We do get a 4.1 in no 4.00000 in favor of the Bulls. The entry signal stop loss is double bottom. Given that we have some time left, let's run through some currency alternatives. Here is gold. Gold, it's been underperforming for such a long time, losing all horizontal support levels, moving averages, you name it. The last 2 weeks we have seen some interesting bullish action. We have strongly smashed through the 200-week moving average in red resistance. That's good. There is a cluster of horizontal resistance levels now above us. Yeah, you also here have the green. Yeah, so it's not like a disaster, but not good either, because it's too easy to short the green 50-day moving average here. Just way too easy. It's worked out too many times in the past, so it's just tempting for the bears. And also bulls, who bought, the low, they are likely to like buy a put, when you get that resistance, which effectively does add to the selling pressure. Looking at RSI and the PBOs, we are emerging from a support level on RSI on the daily data points. Yeah, we are pulling back from an RSI level that recently has been a bit of a ceiling. You can see here that this 60-ish level is sort of like the temporary high on RSI. Also here on the 20-day PPO in purple. There's that. Next, let's look at Bitcoin. Yeah, let's go with the index. Yeah, Bitcoin is just goofing around, just sort of stuck. We do not see support failing. We don't see bulls running to it, buying either. So we're sort of like, I mean, Bitcoin was like infamous for the volatility, but now we have had a very low volatility period for Bitcoin. To be perfectly clear, those periods, they usually build up energy. So there will be a very substantial move. When it happens is a big question. But yeah, Bitcoin is boring now, but I think it will become extremely exciting, maybe a bit too exciting eventually. Here is the silver ETF. A bit more messy for sure than gold, because in this case we are below the red 200-week moving average. We tried to peak above it this week, but we didn't close above it. This candlestick is bullish though. It's just that why? Like, why couldn't we close above it? So, if there are bulls out there, why did they not buy? Why did the sellers overwhelm the bulls? That's the thing. There's interesting. Oh well, on the daily data points, the bulls, they did protect the blue 100-day moving average. So that's so sort of like the bulls are sort of like they're making some wins, some not losses, but not showing enough strength. But I think I will give the bulls the benefit of the doubt here. They are making interesting progress. But to really like intimidate the bears, they need to like close above a prior resistance levels, because currently the bears, they will just look at this and be like, well, it's such an easy level to just short silver. But if the bulls closed above the 200-week moving average, number one, a bunch of bears would severely tighten their stops. Many bears would also close out their short positions, because you don't want to go into the weekend with your sort of like success level, which in the case of the bears, it's the resistance level. That's their like the level they are fond of, you don't want to see a close above it. Similar if you are like a bull and you see that we close below support into the weekend, not really a good event. So we have looked at various things now, interesting things with the Japanese yen Indian rupee pair. And we looked at other things as well. Definitively go to diamondarm.com to get more data.